Hello and welcome to Connect, the weekly podcast for the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support for the California MBA, in large part so that we can continue to be strong advocates for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors. And those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We truly appreciate it. And with that, it brings me to welcoming today's guest. I'd like to welcome Carol Ng, who's the Managing Director at Derivative Logic, on to Connect. Carol, welcome.
Thank you. Thank you for inviting me over here.
I always like to get started out finding out how people came into the mortgage business. So why don't you kick us off with telling us how you got into the commercial real estate finance industry?
You know, it's actually really by chance. I've always loved math. So I went to school and did actuarial science. For those that don't know, actuarial science are people who calculate when people are going to die and what their health insurance premium is going to be, when their car is going to crash, and if their car is going to crash, like how much money is going to cost to repair them. So, you know, that's a lot of math and calculation, and that's kind of where I started, but I got really bored and decided to, you know, do my MBA and thinking to myself, okay, I'm here doing my MBA. What is the most mathy thing that I could do, you know, that's business related? And I came up with two answers. One is
working with Rex.
What is it?
Working with Rex.
That's right. That's right. One is bond, and then the other is derivatives. So I went to New York City after the MBA, working for General Motors Pension Plan, which was the largest private pension plan there was, and working as a bond analyst for internal bond manager. I was a bond risk analyst, and so after that, came back to Denver and also did risk, but for Western Union as a foreign exchange hedging person, and then went to advisory for Chatham Financial and did a lot of commercial real estate risk advisory on the interest rate side. So really, you know, mortgage is that's kind of how that happened. I'm kind of in the mortgage risk space, so not necessarily mortgage, but mortgage risk. So yeah, that's kind of where my career started, and I'm still here.
You're still here. You're still here. So you've been with Derivative Logic since January of 23 last year. Tell us a little bit about the company and its services.
Yeah, we specialize in helping companies of all different sizes with managing their interest rate and foreign exchange risk. So that a big part of it is commercial real estate. We also help lenders with managing their risk. We also help infrastructure firms. We help Native American tribes, kind of all managing their foreign exchange and interest rate risk.
Excellent. Okay. Well, I've known Rex for a long time, and it was great to get to meet you recently at our Western States CREF Conference. We're, of course, thrilled to have you as a speaker on our Women in Commercial Real Estate panel, where you joined industry leaders talking about today's market. What are you advising as far as helping helping strategies for hedging fixed rate and floating rate loans?
Yeah, so that my answer might be a little long, so hang with me here.
That's all right. That's all right.
So for floating rate loan, we're seeing very common sort of vehicles, for example, interest rate caps and swaps. Those have been pretty standard as far as plain vanilla type of execution goes. And so we're still seeing a lot of those with client needing those hedging. So that's not really optional for them. They're looking to extend the loans, so they are needing to, you know, kind of extend their current existing interest rate cap. So we tell clients to come to us early and not wait. Many of these loans need a kind of additional negotiation with their lenders. So, you know, we tell them, hey, even if you are looking to potentially refi, but just make sure you are ready to trade in the event that, the refi don't happen and you need to extend this loan account. So that's
Right.
kind of what we are actually advising for floating rate side. For fixed rate loan, we're getting a lot of inquiries from clients who they know they need to refi into some sort of fixed rate loan, but they like the rates now. So they call and say, hey, what can we do? We haven't locked into a loan yet, but we like the rates. How do we lock in that rate without a loan? So we're kind of having a lot of discussion with existing client on forward hedging, their potential refi. We also are helping quite a lot of companies on their construction loans, because they have existing construction loans and a lot of them are typically floaters. And so they like the curve. They're like, hey, can I lock in a piece of this knowing that I like the curve I'm looking at. So those are the sort of three categories of client we see. We have seen CFOs who are incredibly sensitive or aware of the interest rate environment. So we are for hedging we're hedging out 5-6 years because they can live with a 3% interest rate. So they want to basically lock into some sort of rate that they can live with. They're like, hey, if I lock in that rate for the next 6 years, I have no regrets. So we see that too.
Right. Different. Yeah. It's a weird interest rate environment, right? So there's a lot of factors to be considered. So how does derivative logic help lenders and borrowers in a market like we're seeing today?
Yeah, a lot of education. That's kind of how we help borrowers and lenders. Back in the days when the interest rate was low, people look at us as more like a part of the cost of doing business. It's not necessarily something that they think a lot about. When interest rate was zero, they're like, hey, if I get something, anywhere below however percent, they're good to go. But now it's much more front and center in any discussions with anyone who have mortgages. So now they really have to think through, okay, what are my options? When should I get my execution done? How do I do that so that I can maximize my values? So we have a lot of those discussions on the education on, forward looking in terms of interest rate, the macroeconomics, potential timing of their execution, and how we strategize leveraging different counterparties to kind of help them get the optimal result and minimize sort of the costs. And that applies to both borrowers and lenders. I'm seeing a lot of lenders coming to me and say they want to buy a floor, right? Because if interest rate goes down, it affects their margin. So they want to lock into a floor so that, if rate goes down, they can still kind of generate the kind of return that they plan to, generate.
Right. There's so many aspects that go into a commercial real estate deal. I mean, and just derivative logic is certainly an important part of that. As I mentioned, I had the pleasure of getting to know you through our Western States CREF Conference this year. And in addition to having just an impressive resume and being a fascinating speaker, I learned you also are trained in search and rescue. And when you said as a volunteer, when you said that, I'm like, oh my gosh, I'm like, I've got to learn more about this. So share with us what prompted you to become a volunteer for search and rescue. And you can only see you on camera. You're a petite woman. So I'm like, this was a big challenge for you.
Yeah, so I've always been an outdoorsy. So I've always gone mountain biking, rock climbing. I've always gone canyoneering. That's kind of what I have done since college. So I know how to use rope. I know how to use gears. I'm very comfortable in the backcountry. Zion National Park is probably like my playground. We'll get backcountry permits for like 10 days and we'll go do canyoneering when we don't see another person for 10 days.
Wow.
So that's kind of a little bit of my background. At one point in my sort of life as an immigrant in America, I actually didn't have a visa status to work. So for those who are like me, came here as a student, it's a long and onerous process to try to go from a student visa to become a green card holder and a citizen. It took me 20 years. And so at one point I didn't have a visa status to work. So I was just kind of, thinking, okay, I wanted to be productive and kind of make good use of my time, knowing that I won't be working for a little bit. Because I like, being out in the backcountry. I like being out in the wilderness. I'm like, how do I make this productive? I'm like, I think looking for dead body would be great.
Very few people ever have those words come out of their mouths. So I find that very fascinating.
I know it's a little morbid. Hey, but I was an actuary, remember? I was calculating when people are gonna die and make sure, that happened every year. So that's kind of, I was like, oh, okay, like, let me just do a search and rescue. Volunteering for the sheriff seems to be good. It's a good way to give back, and I could be out in the wilderness with other people. I might not be looking for a dead person, but hey, finding a lost person, someone that's demented or whatever, that's a good year. So, that's kind of how I signed up for search and rescue. I think it was like a 4 months training program. We learned how to do horseback searches. We learned how to work with the dog searchers. We've written helicopters, do aerial search, and kind of all that stuff. So that's kind of what we learned, and that's kind of what prompted me into doing that.
Yeah, it's a fascinating addition to your resume. So thank you for sharing that with us.
Yeah.
And good for you to, it's good community service to use your talents and your skills to kind of give back to, our first responders for sure. Now, Derivative Logic's been a member of the California MBA for years, and of course, always a big supporter of our annual Western States CREF Conference. Can you share with our listeners why the company chooses to support the California MBA?
Yeah, I think the answer is very simple because you guys have done a great job.
We strive to do that. That's for sure.
That's it. Like, you guys have done a great job, and it's a great event, and you guys have put together something that's really meaningful, and so that's why we support you guys.
Well, thank you. And Rex Evans has been a great supporter of us for years, and I've loved working with him, and it's been a pleasure to meet you. And Carol, thank you for being on Connect. This has been fun.
Thank you for the invite.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcasts, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.